Hey all, welcome to ShareTrek. This is Raj here, and today I'm working on some constraints, so you will not see me on the screen, but you will hear my voice. I'm going to start off with analysis of the market, and then I'll proceed to record a separate video for genomics and a separate one for the remaining shares on what to expect for the next week. So I'm going to start off first with the futures. And if you look at the NASDAQ futures, they are looking positive, up 2.07%. And it's looking pretty good. And for me, everything looks a bit scary right now. And I was looking for some inspiration through CNBC. I was looking at various experts just to try and bounce off what they are saying and what I'm thinking about. So I'm going to just give you a rundown on what it looks like, and I would like you to make your own decision. With that said, let's get started. Welcome back, friends. Now, in NASDAQ, if I was to just zoom out, the chart I have here is a 30-minute chart. And I have a 30-minute chart mainly because I want to show you what it looks like at different levels. And you can understand my thought process, and then we'll contrast that with experts on TV. So if you see this diagonal green line, that was earlier a resistance for our bear channel. And this diagonal green line out here, which I'm tracing, it was the support for our bear channel. We went out of the bear channel once, and then we dropped back again. Is the same thing happening right now? That is the question. Now, if I was to move into the one-day time frame, which is what we always use to analyze our charts, you can see here we have a candle here for today, which has broken through the resistance and converted the resistance into a support. So it's out of the bear channel. Is it going to form a new bull channel? There's insufficient data to make that hypothesis. If you look at MACD, it is bearish and it is turning towards the signal line to cross over to the bullish side. And at the same time, if you look at the momentum is pretty healthy and plenty of room for the RSI to run out before it becomes overbought. But go back again to the 30 minutes time frame, and you can see that we are overbought out here. And MACD is bullish, and it's turning towards the signal line to cross over to the bearish side. So if you were to zoom out in this particular time frame, you can see that we are in a similar position to where we were last time when we broke down and came back into the bear channel. Is that going to happen again? I don't have an answer. Now let's go and have a look at the QQQ. We go into indicators and we look at QQQ. And in QQQ, you will see the similar situation. We had gone up. So QQQ here suggests that we are already above the diagonal line of resistance. So I'm going to mark this green. And if we were to, this is the 30-minute time frame. And if we were to look at the RSI, the RSI is overbought. The MACD also is bullish, but it's turning towards the signal line to cross over to the bearish side. So this is looking a bit scary. Now let us go to the one-day time frame. And in the one-day time frame, I'm going to zoom this out so that you can see it more clearly. You can see that we have hit the upper resistance. Now I'm going to turn this back into red so that you can see that we have hit the upper resistance, and we are in a kind of a wedge out here. And are we going to break out on the upper side or the lower side? Because when you look at a one-day time frame, you can see that the MACD is bearish and it's going towards the signal line to cross over and become bullish. And the momentum is also pretty healthy. So this is the reason why I thought I'll look at what the experts are saying. And the experts are also mixed. So I'm going to show you a few clips, and then I'm going to summarize what they are saying, and then we'll take it from there.
Thanks, Scott.
8-week rally? What gets us there?
Well, first of all, I think this was an important week because the market was testing key levels and we had some hot data, but we held the 200-day. But now we're entering what I think is a very strong seasonal period. The next 8 weeks, the S&P could rally as much as 7%. It has a lot to do with the strength shown in January. I think it's going to coincide with the Fed sort of dampening those hawkish tones, and I think people may start to hear the Fed say 25 even though the data's been hot. And we get some inflation data starting next week that I think will sort of take people off the edge that inflation and the growth is accelerating. And I think that combination plus the market at 14.8 times ex-FANG means you got good risk reward. And if VIX falls, I think it's going to be, maybe S&P 4,200 or something by the end of April.
Wow.
As you saw there, Tom Lee was quite bullish. And of course, the conclusion is everything depends on the jobs data that is coming up next week. But overall, his approach was that he was feeling comfortable that there is going to be a rally. So he's bullish. Now, let us look at the next piece of data I have.
President Tom Barkin saying that the Fed has forecast additional rate hikes and no cuts this year, emphasizing that in a speech that he's giving at this hour. He says it makes sense to move rates more deliberately than last year. Deliberately is kind of a code for 25 basis point hikes rather than 50s or 75s. So he seems to support 25 basis point hikes. However, he is pretty hawkish on inflation, saying if inflation persists, we can react by raising rates further. He says normalizing inflation will not be easy. It's going to take more time and effort. Then he has a whole bunch of reasons why inflation may be persistent, including $1 trillion plus on household balance sheets and additional fiscal spending. Says supply challenges haven't all been worked through. They could still hurt. China reopening, he says, as well as Ukraine, could further pressure commodity prices. And workers, he says, will continue to keep pushing wages up to keep pace with inflation.
Well, friends, I would like to show you this particular chart to contrast what we heard in the earlier clip. We heard that there is high savings, but this chart is from Fred, and it is for data from 1959 to 2023. And as you can see here, this is the savings rate. You can see that during the pandemic, the assistance and all pushed personal savings rate high. But at this point of time, we are at a low of around 4.0. And now, if you look at it along with the credit card rates, the credit card interest rates has gone up, and this is all on credit used. So these are all the accounts that have been accessed, and this is the rate that they are paying, 20.40. So I think that the consumer spending must have come to an end by now, because people don't have any more borrowing capacity and they have exhausted their savings. So we should see a little bit of cooling off. Then I will go with what Tom Lee is saying. So that's my thought at this point of time. I don't have any further analysis to share with you guys. Well, friends, that brings me to an end of this video, because I don't think putting any more time on analysis from my side is going to bring any further insights. I think everything depends on the economic data that comes on Monday. I'm not able to do any further analysis, but I would be very curious to hear what you guys think is going to happen on Monday. Please put it in the comments and let's have a discussion. Thanks and have a great day. Bye for now.